Buying vehicles just got a bit more expensive in Singapore as the government seeks to reduce the car population. Buyers now have to pay as much as $36,000 for the right to own a car. Observers say rising demand from ride-hailing services Uber and Grab are partly to blame. Tony Waterman spoke to the CEO of FWD Singapore recently to find out how this trend is affecting motor insurance premiums in the city-state.
We actually think the market's going to soften a little bit more. So just taking our example, we launched last year and our proposition to the customer is twofold. One, NCD 50 lifetime guarantee. So it's a full feature product. And secondly, we don't distribute through brokers or agents or any middleman. We go direct to the customer. So the savings we get from the commission, we pass on to the customers. Now, I think this would actually set off a virtuous cycle in the market, where the industry will need to respond with either fuller feature products and therefore better value for the customer or lower prices. So I would actually think that the trend's southwards rather than northwards.
What we've seen over the last couple of years from 2013, 2014, 2015 is that the actual number of cars on the road has been falling. Right. It's been going down. But what we have seen that's quite interesting is that from 2012, the number of rental cars on the road has doubled.
Right.
Is this the Uber, Grab, ride-hailing service effect, and how does that play into premiums?
The overall number of vehicles going down is in line with the government's stated agenda. They want Singapore to be a car-light society over a few years. And I think over a 10-year time frame, we would have roughly 320,000 private vehicles on the street compared to 550 that we see currently. So that's going in the direction the government wants it to. The mix within that, within the car, has changed, as you pointed out. So instead of outright buying a private vehicle for themselves, they're actually leasing cars and using them for Uber and Grab as a secondary commercial activity. So I think as a result, what will happen is if you were a private car driver and you've converted your car to a commercial use, which is, let's say, for Uber or Grab, the premium goes up because the nature of the use the vehicle is being put to has changed. The nature of risk has changed. The car is exposed to a lot more risk. It's on the streets a lot more. So the premium goes up for that particular vehicle. Whether in the aggregate that changes moves the needle for the market as a whole, I don't really know, because there are these counterbalancing forces. The market size itself is shrinking, but then the nature or the mix of the market is also changing.
You know, they say a true friend is someone whom you can disagree with and still remain